Sage.
And I'm Andrew Smith, and we're going to talk today a little bit about HAFA changes effective September 1st.
I'm very excited about this. Every time HAFA does a change, let me rephrase, almost every time HAFA makes a change, it's for the better.
It is for the better,
Yeah.
and I mean, everybody knows the programs out there are not perfect, but they are trying to make them better, and it's the feedback from agents. It's the feedback from the transactions that have gone through that are making these changes possible. And we're just going to briefly touch on three main changes to the HAFA process that go into effect as of September 1st. And these are pretty key changes. And the first one has to do with monthly gross income of the seller, the borrower in this case. And one of the big problems with HAFA is it was kind of linked to HAMP and the percentages that we were looking at. There was a situation where if the mortgage payment, that magic number was 31%, to
Yes.
put it that way. So the way it was working is if the mortgage payment was greater than 31% of monthly gross income, then that was a great qualification towards HAMP and or HAFA. The problem that we ran into is that in many cases for HAFA, the mortgage payment wasn't 31% of monthly gross income. It was actually less than that. It may have only been 25% or 26%. But that doesn't mean that the seller did not have a legitimate reason to sell. There could have been other debt involved, credit cards, houses, something else, a business failure, something that they were paying for, but it wasn't just the mortgage that was eating up all of that. So effective September 1st, that 31% requirement is gone. So the gross monthly income of the borrower, it's irrelevant. So where that is, so they've actually removed that completely. So that means more and more people are going to be able to get into and qualify for the HAFA program.
And that just makes me wonder, is that going to affect the loan modification situation? Because these two kind of work hand in hand, the HAMP and HAFA.
Right.
So if they change this 31%, how wonderful would it be? And I'm kind of in fairy tale land right now.
Yeah.
But how wonderful would it be if they say, okay, with HAFA, this 31% is now gone. We're going to use different ratios, or we're going to look deeper into the need to sell and the hardship. How fantastic would it be if the HAMP program now says, look, we're getting rid of this 31% also, which is basically what they're qualifying at also, and saying, look, let's look at their gross monthly income, and let's look at all of their bills, because
Let's base this on the overall picture, and not just one aspect of it.
Even the application is so vague. I've seen clients walk in and it says gross monthly income, other income, child support, alimony, other. Well, what's other?
What's other?
And then what's even worse is that what happens on the expenses, it says mortgage payment, and then it says insurance or something or taxes,
right?
HOA.
It only gives you like 4 categories.
And then it says other
again.
Well, what's other?
Exactly.
Medical expenses and credit cards and
gas,
a holy crap account.
Exactly.
I got a holy crap account.
Yeah.
Holy crap, life just happened. I need a couple $1,000s like right now. Well, if you don't have that account,
right. Exactly.
then that's an other expense. So I'm hoping and praying that HAMP follows and says, look, we're going to change this too and help more people make their home affordable. It doesn't hurt the lender at all.
No, it doesn't. So, I mean, that one right there on the income is a huge, huge step forward. The second one is also pretty key for HAFA. It has to do with the property being vacant. First and foremost, in the past, in order to qualify for HAFA, the property couldn't be vacant. It had to be the primary residence, and they basically have to still be occupying the property. Now, in order to be considered for HAFA, the property can be vacant and or a rental for up to 12 months prior to the sale being enacted. And what I say with that is that's the lender receiving the HAFA application.
That is so awesome, because you know what happens? Homeowners out there get into a panic, all right, and rightfully so. They don't get a loan modification, or maybe they even try to get a loan modification, and then they've got to go. They're worried. They're afraid someone's going to show up and board up their house.
Exactly.
Yeah.
And I mean, and a couple of things on here. The only thing that you do have to do is if the property has been a rental. So for instance, there's some people that moved away, they're trying everything they can to do the right thing. They put a renter in the house even though the rent may not have covered the mortgage, and they're finding after 6-7 months, you know what, we can't continue to subsidize this. This is not working. We now need to sell. They're now still going to qualify for HAFA as long as they can prove that the property was their primary residence within that 12-month window.
That is awesome.
So the borrower's reason for relocation does now not need to be connected, and again, not need to be connected to reemployment or transfer of employment, and they have also removed the minimum distance requirement.
Awesome.
So again, huge changes right there that are really going to help move things forward. And lastly, the other major change coming in is they understand that the sale process has been taking too long.
Way too long.
Way too long. So the last one deals with timing. They're now saying that within 30 days of the RASS being received, the request for a short sale, or the executed sales contract, they must communicate approval or non-approval with regard to the program or provide a counteroffer within 30 days.
This is going to be so awesome because now we went from, in my opinion, we went from standard sale, boom, we got an answer within usually 72 hours from the seller. REOs, boom, we normally have an answer within 72 hours or less from the actual bank. Now short sales, and the big fear of buyers in short sales is that, oh, I'm going to, we did videos on the earnest money deposit and whatnot. Oh, I'm going to put this offer, I'm going to sit back for 6 months and the whole market's going to change. And I think the banks are seeing this, is that we can't wait for the market to change. We have to act on this now.
Get moving.
What home buyers and home sellers need to understand is this, is that these processes take time to get into place. We're not talking about 1 or 2 loans here. We're talking about millions and millions and millions of homeowners right now that are in distress, that need help. And finally, and I'm not going to tell you my opinion of why I feel it's happening right now, but an election year is coming up.
Exactly.
Okay? Finally, we're going to start pushing this process. Added to that, it's taken the banks this long to employ and train, what do you call it? The paper hat syndrome?
The paper hat syndrome.
Yeah, to employ and train enough people to at least understand the basic procedures of the HAFA program. And this is all great news.
It is, and they actually announced all these changes back in May, and they encouraged the servicers to adopt them as soon as possible, but they actually became effective where they don't have a choice from September 1st. So we are really, really hoping, as I'm sure many of you are, that these get implemented quickly, that they've already been working towards these, and we see a speed up of the process overall, and more people being approved for HAFA.
You know what I really hope happens here? This is my dream for every homeowner out there right now, that 90% or more of the people qualify for this HAFA program.
That would be fantastic.
That's on a short sale. And those that don't, the remaining 10%, qualify for a co-op short sale. This way that homeowner is getting something to help them relocate and start all over.
Right.
That would be Disneyland for me in the world of real estate.
It would be fantastic. And again, we're making a huge assumption here that all of the people applying for the short sale actually deserve to be going through a short sale or qualify for a short sale.
Are you saying that there's people out there that don't qualify for a short sale, that are bogging down the system and causing us all kinds of pain and suffering?
That's another 10 minutes, which I don't think we're going to go into right here. But some of these, some of the things related to the videos we did on earnest money, one of the problems is, again, just because it's listed as a short sale doesn't mean it is a short sale. So it comes back into really understanding where that listing agent's coming from. And for all the people that legitimately need to do a short sale, they qualify to do a short sale. We've already gone through the 16 reasons for a short sale, the acceptable hardships. That this is going to open up more doors and help, alleviate the backlog, so to speak, and push more of these through. So I think it's great news. It's a huge step forward, and hopefully it's going to bring some relief to many more people.
Here's what I predict, okay? According to the numbers.
Write this down.
Going through my RAM memory right now. 2007, I want to say it was July or August of 2007 is when the Fed said to the banks, no more pay option arms, no more creative financing, right? And a lot of those, a lot of people went on 5-year pay option arms. That ends in 2012 next year.
The number of resets coming up is huge.
Is gigantic. This is the federal government and the banks trying to stop a mass exodus of people leaving their homes.
Right.
Okay? Every seller out there right now that is pissed off at the banks when it's not fair, it's not fair, it's not fair, they're trying to make it fair. That's my true belief.
I think you got something there.
I truly think that by 2013, got to give it another year past the election, another year into past all these adjustments or all these arms maturing. I think we're going to start to see a lot more stable market. We're seeing a really stable market here in Southern California right now.
Well, in our particular area, I think numbers that we saw, if you look at the actual median price, it hasn't changed by more than $500 up or down in the last 30 months.
Awesome.
And that's numbers that came directly from our board of realtors. That's not us crunching the numbers. That's numbers we were given directly by our local board in how stable it has been. Now granted, there's certain neighborhoods where there's little pockets where it's going to go up and down, but we're talking an overall market segment. So this is only going to help that, because if you look at it in our market, our inventory is very, very tight. We have a tight supply.
It's so low.
Like a month and a half, okay? So everything under any other conditions, prices should be escalating. It's a tight supply, demand is there, that should force pricing to go up. It's not. So there's a lot of other factors at play here. A lot of them have to do with employment and things like that, which we're not going to get into. But this is a great step forward, great news. Again, love your feedback. www.s2neg.com. Catch you next time.